Subscribe to LearnCab and hit the bell icon to get notified.
Hi friends, now let's start with the next chapter. We are done with the chapter of activity-based costing. Let's start with the next chapter now. Budgetary control. Before I start with this chapter, let us first understand the term which is budget. Friends, even though we have technical definitions for this in our textbooks, which we will learn it later, right now we need to understand the real meaning of the word budget. And to explain the real meaning of this word budget, I would like to share with you one of the person's life experience, one of the persons who has inspired me a lot. His name is Arnold Schwarzenegger. Most of you would have heard of him. Who is he? Some of you would say that he was one of the greatest bodybuilders of all time. He was Mr. Olympia. Some people say that he was one of the greatest actors of all time. Some would say that he was one of the best governors of California. In one life, this person has achieved three great things: bodybuilding, acting, and ruling a country, like becoming a governor of California. Friends, Arnold has some rules which he follows in his life to achieve whatever he wants to do. If those rules are the base points, that same rules he keeps applying for, let's say, bodybuilding, then he'll apply the same thing for acting, and then to become a governor of California also. Friends, what Arnold used to do when he used to do bodybuilding was, he would first create a dream, or this is a vision, where he would say that he would want to become the greatest bodybuilders of all times. Arnold knew this very well, that just having a vision will never help him to reach there. So what he would do is that once he creates this vision in his mind, step number 2, he would write down what are the inputs which are required to achieve this dream. For example, he would have written down that in order to achieve this dream of becoming the greatest bodybuilder of all time, he would do, let us say, 100 push-ups, 100 sit-ups, etc., etc. Or what he basically used to do was, he used to create a very, very clear checklist of what are the inputs to be done so that his desired output can be achieved. Once he writes down these inputs, his rule number 3 was work hard, work very, very hard, that there is no way you can fail. So the rule goes like this: he works hard on the inputs which is in his control, through which automatically the final dream of becoming the greatest bodybuilder became successful. This is a very, very powerful learning according to me, because this is not only the rule that is there to succeed in bodybuilding, it is the same rule which has to be applied by all of you in all the areas of life, let it be CA, let it be CWA, let it be anything. If you want to achieve, these are the 3 main rules: create a vision, create the inputs, and then work very hard towards it. In my language, these inputs, what is written over here, is what I call it as a budget. These are the targets what Arnold wanted to achieve. Only then he could achieve the desired result. Just like this, friends, every company has a dream of making a lot of profits. But if that dream has to become a reality, they need to have independent checkpoints at different places, through which indirectly they would achieve the dream of achieving good profits. And hence, to create this, they need some inputs, and these inputs has to be put in numbers. If we just put it without numbers, it will be very, very unclear, and we will never be able to achieve it. So in my language, in a very, very simplified manner, budget is nothing but it is your dreams which you are converting into inputs and which you put in numbers. This is a very, very simple understanding of the word budget. Definition wise, we would definitely learn that, but now let's first understand what exactly is happening in this. To give an overview of this chapter, we are going to cover mainly the following things, which is there at your final level. One is functional budget. Second one is flexible budget. The third one is cash budget. Then we have a few budgetary ratios. And finally, we have theory. And yes, we have one more type of budget, which is known as product-wise budget. Questions point of view, these are the main things which come at the final level: product-wise budget, functional budget, flexible budget, cash budget, budgetary ratios, and theory. I request all of you to please draw this chart in your books so that you get an overview of this chapter very, very clearly. Now we go in depth of this one at a time. Let's start with the first concept for today. Concept number 1. Functional budget. Let's go back to the basics, what we learned in our initial classes. I hope you remember the structure of a factory. I had given a whole structure of a hotel, which I would draw over here once again for your better understanding. We had store, then we had production, then we had inspection, then we had dispatch. Apart from these four, I had given a lot of planning divisions over here. One was sale, second one was production, third one was purchase, fourth one was HR, fifth one was finance, and the sixth one was R&D. Sale, production, material, HR, finance, R&D. And here we had store, production, inspection, and the last one is dispatch. Alright friends, this is a part of the factory and these are the part of the planning department. These 6 planning departments are nothing but 6 functions of an organization, which are sale, production, material, HR, finance, and R&D. If we create budget for each of these functions, then such budget is what we call it as the functional budget. So friends, I hope you understood the meaning of the word functional budget. It is targets given to each functional departments. Now, let us take a very simple example, as we always do, and understand the logic of each of the functional budgets. For that to happen, let us first look at this image. What do you see on the board? You see puri and aloo sabji. What we are going to do here is that we are assuming that this is a hotel of which Tarun is the owner, and in this hotel Tarun sells only one food item, that is puri along with aloo sabji. If you observe, I would say there are 2 puris over there and there is 1 bowl of aloo sabji. For time being, we'll ignore the onions. We'll not think too much about the onions kept on the side. Tarun has opened this hotel with only one big dream. He wants to make a lot of money. But Tarun has understood one thing. He cannot do this alone. In order to make this happen, Tarun will have to appoint many people under him who can help him in different verticals. First one, Tarun would appoint a sales manager. Let us say his name is Mr. A. He would appoint a production manager, Mr. B. Then he would appoint a material manager, Mr. C. He would appoint a HR manager, who is Mr. D. He will appoint a finance manager, Mr. E. And he will also appoint an R&D manager, Mr. F. Now, what is the role of a sales manager? His role is to maximize sales. Hence, for him we will create something which is called as sales budget. The second person is production manager. His role is to ensure optimum production Therefore, he will be given a budget which is known as the production budget. Third one, material manager. His role is to make available raw materials. Hence, he will be given material related budgets. The fourth one is going to be a HR manager. He has to make labor available. For this, he will have labor budget. And the fifth one is a finance manager. He has to prepare accounts properly and prepare a finance budget. And the last person's role is just to do research. So he will provide an R&D budget of how much money will be spent on research and development every year. These are the 6 functional budgets: sales budget, production budget, material budget, labor budget, finance budget, and R&D budget. Friends, as I do always, now I will give you one example. This example might take around 40 to 45 minutes. But this one example will combine everything in one picture, and in a very simple language, you can understand the whole of the functional budget. We will put it as sub-concept number 1. It is a sale budget. Now, Tarun has appointed Mr. A. Now, Mr. A has come and promised to Tarun that in the coming year, financial year, he will be able to sell 1 lakh puri sabji. And each puri sabji will be sold at, let us say, 20 rupees. So that would mean for the coming financial year, the total turnover will turn out to be 20 lakh rupees. Friends, this is a very simple way of explaining to you the sale budget. Here we are having 2 types of sale budget. 1 lakh puri sabji is what I call it as sale budget in units, and 20 lakh rupees is what I call it as sale budget in rupees. So friends, it is very, very clearly given over here. Sale budget in units, sale budget in rupees. I hope you have understood the first sub-concept about the sale budget. It is very easy and very straightforward. Exam point of view, these numbers would normally be given to you or they'll give you some information from which, as hidden information, you can find out the sale budget. You don't need to work any extra hard on this part. This is very, very simple, very, very straightforward. Let's go to the next subconcept now. Subconcept number 2. Production budget. Here we have the second manager coming in. His name is Mr. B. The role of Mr. B is to produce maximum puri so that the sale demand can be satisfied. Now in the given case, the sale demand is said to be 1 lakh puri sabji. So normally, as a production manager, he should produce 1 lakh puri sabji. But there is a small twist. Suppose he produced 1 lakh puri sabji. At the end, there are some 5,000 more customers who have come for puri sabji, and unfortunately, there is no production happened for that, or sale went beyond 1 lakh units. At that time, the hotel will be forced, or I as the owner will be forced to tell to the customer, sorry sir, it's over, you can go back. But friends, from business point of view, that is one of the wrongest decision to be taken, because from a business point of view, one customer goes away from your hotel, he will never come back again to your hotel, because he will have a very, very bad experience over there. So all time what we do is we keep some safety stock or some buffer stock with us, so that we are able to make our customers happy. So let us assume in this example, we have a target closing stock, which will be our buffer stock. Let us assume it is turning out to be 20,000 puri sabji, which will be kept with us at all points of time, so that whenever a customer is coming, he will not return back. So he should not produce only 1 lakh, he should produce 1 lakh plus 20,000, which turns out to be 1 lakh 20,000 puri sabji. But friends, today is 1st April. Today morning, already there is an opening stock of puri sabji which is kept with me. Let us assume that is turning out to be, let us say 10,000. So I don't have to produce this again, it's already available with me. So how much I have to produce would be 1 lakh 10,000 puri sabji only. This is what I call it as the production budget. So friends, as far as a production budget is concerned, it has a formula, and the formula is sale plus closing stock minus opening stock. Once we do this, we get the budgeted production. I hope everybody has understood the concept of budgeted production. Alright friends, so we learned subconcept number 2 also, which is budgeted production. Subconcept 1 was sale budget, subconcept 2 is production budget. Now we go to the third budget, which is the material budget. Subconcept number 3, material budget. I would like to give you a chart to understand this better, because inside this we are having 2 subdivisions. One is called material consumption budget, and the second one is called material purchase budget. Inside this we can find out in units also, or we can find out in rupees also. Here also we can do it in units, or we can do it in rupees. Friends, so we'll do one thing. Inside subconcept number 3, we'll call it as part 1, and the other one we'll call it as part 2. Alright, let's go to the next page and do part 1, material consumption budget. Alright friends, now I told you the material manager has got one role, that is whenever puri sabji is produced, they need mainly two raw materials. One is they need puri, other one they need potato. Only with these two raw materials you can make puri sabji. So now I will give you a calculation of how this works. As per the target what we have created, we are going to produce 1,10,000 puri sabji. To make every one puri sabji, we need two puris, and let us assume we need one potato. If this is the case, for producing 1,10,000 puri sabji, I would require 2,20,000 puris to be consumed, and I would require at least 1,10,000 potatoes to be consumed. The word what I'm using here is a very important word, which is consumed. It is not purchase. That much puris are getting used, excluding opening stock or closing stock. This much puris are getting used to get this kind of a production. This is what we call it as the material consumption budget. This is the consumption budget in units. We can also find out the consumption budget in rupees. Let us assume one puri is having a price of 10 rupee, and 10 rupee will become too much for a puri. Let's take some little number or else we'll run at a loss. One puri is having a price of, let us say, 5 rupees, and one potato is having a price of, let us say, 2 rupees. Alright. So 2,20,000 puris if we are using at 5 rupee, my total cost due to consumption or cost of raw material consumed, cost of raw material consumed would be 11 lakh rupees for puri and 2,20,000 rupees for potato. So here we learned the next important budget, friends, that is material consumption budget in units and material consumption budget in rupees. Let us put a formula for understanding this better. Material consumption in units. Let us say, in my example, the formula what we used was 1,10,000 units into 2 puris, or from this I can say that it is production into consumption per unit. So friends, this is the formula for material consumption budget in units, which is nothing but production into consumption per unit. Now let us go and understand the formula for material consumption in rupees. Here we use the formula 2,20,000 puris into 5 rupees per puri, which turns out to be 11 lakh. Or in other words, we can say that the formula is consumption in units into price per unit. Excellent. So we are done with part 1 of material budget, which is the material consumption budget. Here the entire focus is on consuming, or the materials which are consumed, which is very, very important. Alright friends, let's go to part 2 now, which is purchase budget. Now here we are having two raw materials. The first one is puri and the second one is potato. We have understood that the consumption of puri would be 2,20,000 puris, whereas potato would be 1,10,000 potatoes. Now friends, this is what is to be consumed. Consumption and purchase are two different terms. Let us assume that if I just keep 2,20,000 puri with me, tomorrow an extra customer comes, I will not be able to satisfy him. So I will have to again keep some buffer stock with me so that I will be in a position to give extra puris or produce extra puris in case of excess demand. So what we normally do here also is that we create a target closing stock. Let us say for puri the closing stock is 10,000 and for potato the consumption is 5,000. Apart from this, we will already have some opening stock in our hands. Let us say opening stock for time being is 30,000 and 15,000. From this I can find out how much puris I should purchase and how much potato I should purchase. So I get the answer as 2 lakh puris I should purchase, and here I get the answer as 1 lakh potato. These numbers are coincidentally equivalent to the sale units of 1 lakh for potato, but for puri it is double. That's because it's 2 puris. But don't get confused with that. I have just taken this number so that we get round off figures and the example becomes easy. Now we will put the purchase cost. Earlier we found out that price of 1 puri is 5 rupees and price of 1 potato is 2 rupees. Let me confirm. Yes, it's 5 rupees and 2 rupees. So based on that, my total purchase budget in rupees will turn out to be 10 lakhs, and here it turns out to be 2 lakhs. This budget is what we call it as the purchase budget. We have got two things over here. One is purchase budget in units and the second one is purchase budget in rupees. So let me just make a summary of purchase budget in units is nothing but consumption plus closing stock minus opening stock will give me the purchase budget in units. Once we get the purchase budget in units, once we multiply this with the purchase price, I can find out what is my purchase budget in rupees. So the formula for purchase budget in units is budgeted consumption plus closing stock minus opening stock, whereas for purchase budget in rupees the formula is purchase budget in units into purchase price per unit, which is equal to purchase budget in rupees. Let us just summarize what we learned so far. Point number 1, we learned what is a sales budget. Point number 2, we learned what is a production budget. The formula for production budget is sale plus closing stock minus opening stock. After that, we went to the third one, that is raw material budget. In that, we had two subdivisions. One is raw material consumption budget. Other one is raw material purchase budget. Raw material consumption budget, we learned the formula is production into consumption per unit. Whereas for purchase budget, the formula is consumption plus closing stock minus opening stock. I hope everybody is clear till this part. Now let's go to the next one, subconcept number 4. The labor budget. Here we have to find out mainly the following. One, we have to find out how many hours the labor will work. labor hours. Similarly, we will have to know how many workers are required. And last one, we would like to know what is the labor cost. Maybe with the same example, we can understand this better. In order to make puri masalas, our target production of puri masala is 1,10,000 puri masala or puri sabji. Time taken. Let us assume to make one puri masala, it takes 10 minutes. In that case, for making, total time taken for 1,10,000 puri masalas will be nothing but 11 lakh minutes. If I convert this into hours, let us find out how many hours it turns out to be. It is 18,333 hours. This is what I call it as budgeted labor hours. Let's go to the next one now. Let us assume that the labor is being paid on an hourly rate and the rate per hour for labor turns out to be, let us assume, 5 rupees per hour. In that case, the total labor cost would be 91,665. This is what I call it as budgeted labor cost. Now we go to the third one, which is the manpower requirement. Everyone please look up. Here, total hours is 18,333 hours. One person can work for 8 hours in a day, into 25 days in a month, into 12 months in 1 year. So if you look at this, 8 into 25, 8 into 25 into 12 turns out to be 2,400 hours. So one worker will require 2,400 hours. Here I need 18,333 hours divided by 2,400 hours. So I would need approximately 7.63 workers, which is not practical. Hence, I will appoint 8 workers in my factory. This is what I call it as budgeted manpower requirement. So friends, let's summarize. We learned 3 important budgets over here. The first one is budgeted labor hours, the second one is budgeted labor cost, and the third one is budgeted manpower requirement. Let's summarize the formulas in a neat manner. First, we learned about budgeted labor hour. Here the formula will be production into time per unit. The formula what we used was 1,10,000 units into the time taken was 10 minutes into 10 minutes divided by 60 minutes per hour. The second thing what we learned was budgeted labor cost, which was nothing but budgeted hours into rate per hour. So in our case, we use the formula 18,333 hours into 5 rupees. Into 5 rupees. Last one we learned about what is the manpower requirement. Here the formula what we used was total hours needed divided by hours per person per year. The formula what we used was 18,333 hours divided by 2,500 hour per person per year. I hope friends you are clear with these three formulas for the labor budget. This covers all the different formulas which can be used for labor budget in the examination. Now let's go to the next sub-concept. Let's recall once again first sale budget. After that we had production budget. After that we had material budget, inside which we had material consumption budget and we had material purchase budget. After that we had labor budget, inside which we are having budgeted labor hours, we are having budgeted labor cost, and also we are having manpower requirement. Based on this, now let's go to the next concept. Sub-concept number 5. Which is a finance budget. Friends, in a finance budget, these are the normal things what is prepared. First one is budgeted cost sheet. The second one is budgeted profit and loss account. Third one is cash budget. And the last one is budgeted balance sheet. Right now we will learn these two budgets. The remaining we'll look at it later. So let's go for the budgeted cost sheet now. So inside this part 1, budgeted cost sheet. I hope you remember the format of cost sheet which we learned in our initial classes. Direct material, direct labor, prime cost. So let's fill it up one by one at a time. We'll start with direct material. In our case, here direct material there are two things. One is puri and the second one is potato. Puri, we are going to have 2 puris and it's having a price of 5 rupees. So I would say that the total cost turns out to be 10 rupees. It is 1 potato having a price of 2 rupees. So here I get the answer as 2 rupees. So like this I got the number for direct material. Now I will fill up for direct labor. Labor, we have told that it would take approximately 10 minutes to make 1 puri sabji. And the rate, what we told was 5 rupees per hour. So I would divide this whole thing by 60 minutes so that I can get the hourly rate. So 10 by 60 into 5 would turn out to be, that turns out to be 0.833. In my example, I have taken it in a very simple way. We don't have any factory overheads right now. We don't have any selling overhead, admin overhead. So this is the only total cost which comes under our approach. So the total cost right now turns out to be 12.833. And the sale value is turning out to be 25 rupees. Let's just confirm whether it is 25. Sorry, it's 20 rupees. The sale price is 20 rupees. So which means the profit is approximately 7.166. Let me cross check with the calculator. 7.167. All right. So this is what we call it as the budgeted cost sheet. Cost sheet is nothing but a summary of all the costs which is incurred in the company, and the same thing is put in a manner. But this is not fully complete because we have only put direct material, direct labor, that's the prime cost. Normally you will have factory overhead also, selling overhead also, administration overhead also. I think once we have got this, part 2, we have to prepare budgeted profit and loss account. Alright, let's draw a balance sheet now, sorry, a profit and loss account now. The format is, we have opening stock. Here we are having mainly 3 things. One, we have opening stock of puri. we have opening stock of potato. These two are raw materials. And we have opening stock of puri sabji, which is a finished goods. Here we will have buy sale. The sale will happen only for puri sabji. Then I will have buy closing stock. Here again I will have puri. I will have potato. These two are raw materials. And I will have puri sabji, which is a finished goods. Apart from this, I'll have over here to purchase, where I'll be purchasing two things. One is puri, which is a raw material, and the second one is potato. And the last one what I'll have over here will be wages. So let's start with the opening stock. We'll just check up how much is the opening stock of puri as per the material budget. Okay, here in the purchase budget, we have taken the opening stock of puri as 30,000 and the price is 5, and potato is 15,000, price is 2. So I would say the formula here is 30,000 into 5, 15,000 into 2. So 30,000 into 5 would give you 1,50,000, and the second one would be 30,000. Now, puri sabji finished goods, we have the opening stock from the production budget. In the production budget, the closing stock was 20,000 puri sabji. So for this 20,000 puri sabji, the cost is something what we found out in the cost sheet. When you go to the cost sheet, the cost is turning out to be 12.833. So 20,000 into 12.833 turns out to be 2,56,660. 2,56,660. Alright. Now, let's go to the purchase part. Puri purchase we'll have to find out from the purchase budget. In the purchase budget, we have shown 2 lakh puris to be purchased at 5, which is 10 lakh, and the other one is 2 lakhs. So the number is 2 lakhs and 10 lakhs. Sorry, 10 lakhs and 2 lakhs. Two lakhs. Salary, wages, we have already found out the budgeted labor cost. We have got the answer as 91,665. Sale, we are selling 1 lakh puris at 20 rupees. So that gives you the number as 20 lakhs. Now let's fill up the closing stock also. It is 5 rupees here, 2 rupees over here, 12.833 over here. But I just need to take the numbers of the closing stock now. For puri, in the purchase budget, we have taken the closing stock as 10,000 and 5,000, 10,000, 5,000, and the finished good closing stock is 20,000, 10,000, 5,000, 20,000. So here it is 10,000, here it is 5,000, and here it is 20,000. So 10,000 into 5 will give you the answer as 50,000. 5,000 into 2 would give you the answer as 10,000, and 20,000 into 12.833 would give you the answer as 2,56,660. From this, we need to now find out the profit. So it's 1,80,000, or we'll start from the right side, that's 20 lakhs, 20,50,000, 20,60,000 plus 2,56,660 minus 1,50,000 and 30 is 1,80,000 minus 256,660. 1 minute friends, there looks to be a small error somewhere. The opening stock of finished goods and the closing stocks is the same. I think I have taken the wrong number. We'll just cross check once again. Closing stock is 20 and the opening stock is 10,000 puri sabji. So I think here we'll have a change. 10,000 puri sabji. So here friends, sorry, it's going to be 10,000. It is 10,000 puri sabji. So I get the number over here as 1,28,330. Alright. Now let me rework and check what is the answer or what is the profit. That's 20,60,000 plus 2,56,660 minus 1,80,000 minus 1,28,330 minus 10 lakhs minus 2 lakhs minus 91,665. That is 7,16,665. So we get the profit as 7,16,665. Now friends, I'll just like to show you a reconciliation for you to understand this thoroughly. Our profit is 7,16,665. This profit I have got when I am selling 1 lakh puri sabji. So I can say my profit per unit is this divided by this, which is nothing but 7.166 rupees. If you observe, this is exactly the same answer what we got over here. Hence proven that cost sheet profit per unit and the P&L account total profit will always be reconciled. Finally, we have come to an end of this whole comprehensive concept, friends. Let me just summarize. We learned the sale budget, the production budget, the material budget in which we had consumption and purchase, labor budget, and finally we learned the finance budget. Thank you so much, my dear friends.
Subscribe to LearnCab and hit the bell icon to get notified.